Folks, welcome to Best Stock Charts for the new trading week. This is Bob Desmond over at the Contrarian Trader, and we're going to talk about the stocks that we like this coming week. First one up is going to be ENPH, then CHWY, ARKK, that's the Arkk Fund, CLX, which is Clorox, and AXP, which is American Express. I will link to the charts that we're going to review down below, so go check them out if you'd like to look at them in greater detail. And you're probably asking yourself, why am I listening to this guy? How did he do last week? How was his week? We had an awesome week. It was probably one of our best weeks out of the year in both of our swing trading and our options writing business. In our swing trading account, we're very heavily long of silver, gold, the gold mining stocks, the silver mining stocks, and some tech stocks, which have been beaten up. And they all did very, very well last week as the U.S. dollar weakened. In our options premium account, where we like to be the casino and not the gambler, where we usually sell premium, thereby generating cash flow by benefiting from time decay on the options that we've sold. You saw a lot of volatility come out of the market last week, and we got paid on those positions. The only one down position that we did have was BOIL, which is a leveraged ETF putting you long of natural gas. And the price action in both oil and natural gas caused me to begin our bear operations on the energy sector by getting a short of the XLE on Friday afternoon. We plan on adding more to that trade as we become more and more bearish on the sector. And of course, when the trade begins to go in our direction, we're not going to add more to a trade when it's not working out properly for us. We'll exit the trade very, very quickly. Now, before we begin our analysis of the charts that we like going into the new trading week, I'd like to give a shout out to our sponsor being the folks over at Trendspider. Folks, Trendspider is the next generation in automated technical analysis using artificial intelligence. If you're not familiar with how to draw trend lines, don't worry about it. The algorithm does it for you. And if you are experienced with technical analysis as I am, well, you'll be surprised at times where the algorithm picks up a support or resistance level that you missed on. So it helps improve your game. So take a moment, head on over to their website using the link below, because their software is going to allow you to automate your grunt work, speed up your technical analysis, and improve your accuracy by reducing costly analytical mistakes. Find winning chart setups. How do you do that? Well, you use their scanner. Their scanner is like a technical analysis search engine. Think about Google for charts. Find every needle in the haystack by using their scanner. Turn your scanner into a watch list. You could scan any market, and you could also scan during extended market hours. Not many services offer that. So again, please take advantage of their 7-day free trial offer. Use the link below. Find out more about their product. You can now execute trades off of their platform. And please take advantage of my 35% discount code, CON35, using the link below. And I believe in them so much, I've incorporated their product into our product offering, and you'll get Trendspider for free when you join the Contrarian Trader using the silver or gold level memberships, either monthly or annual, doesn't matter. We do discount for annual memberships, and you'll get a 14-day free trial offer. Cancel at any time. There's a button in your membership profile. You can click it, cancel at any time. And if you're not ready yet, that's fine. Click like and subscribe to the channel. Click that notification bell. Get to know me, and at least take advantage of Trendspider 7-day free trial offer. Again, link below. Let's get to it. Now, before we begin going over the charts that I mentioned earlier, we're looking at the S&P 500, and what we're going to be talking about with members on the week ahead commentary shortly will be posted in the members area. We're going to be doing analysis on the overall market, including the bond market and the subsectors, to determine what are the probabilities of this market moving up higher into the new trading week. So members, head on over to the members area by about 4 p.m. Eastern Standard Time, and it'll be posted in the members area, or you could check your inbox of your email and you'll find the link there. So before we leave this chart, S&P 500 weekly view, we are up and into resistance. So a question mark with regard to, does the market break out next week or does it not? But the one value that Trendspider does offer here is this. Seasonally speaking, going back 17 years, the month of December, we've been up 71% of the time. Now, tomorrow night on Sunday Night Futures Live, 6 p.m. Eastern Standard Time here on YouTube and Twitter, we'll be discussing seasonality of how the markets do on a weekly time frame going into the back half of the year. So if you're not on our email list, you want to get notified of when we go live, either A, hit the notification bell, but that only tells you when we go live. You'll probably miss the first several minutes of the show. If you want to get notified in advance of us going live by about a half hour to 45 minutes, there's a link below. Get added to one of our opt-in email lists. I have a 5-part video tutorial on my top 5 favorite candlestick patterns. You'll get that for free, and you'll also get added to our notification email list of when we go live, and no, you will not be spammed. Let's get to it. So let's begin with Chewy, symbol CHWY. Chewy has fallen from a very, very high level. It's obvious, but what we've done here, folks, is that we've begun to put in higher lows. This is a weekly chart, higher lows on a weekly time frame, and we are poised to begin breaking out to new higher highs. We're right there. And I fully suspect as we proceed into the back half of the year that we're probably going to get a continuation breakout on Chewy. Now, looking at the fundamental data, the fundamentals are not wonderful, but we're not here for that. We're not here for fundamental trading. We're here for technical trading. And two of the most important metrics for me from Investors Business Daily is relative strength, which is giving us a green light reading of 92. The group relative strength is a B+, giving us a green light as well. And the accumulation distribution ranking is an A-, also giving us a green light. Therefore, what IBD is telling us is that if we were to look at the chart, we should expect to see a stock that is under accumulation, and they would be correct. Again, it's putting in higher lows and beginning to threaten to break out to new higher highs. So members, I'll be putting in the members area our entry point, our price target, and our stop loss point on Chewy. And we'll also discuss the daily chart, and we'll develop a strategy as to where we believe the best entry point is going to be for Chewy from a risk-reward perspective. The next chart up is going to be the Arkk fund, ARKK, the symbol. Now, I know, this ETF, this family of ETFs have gotten beaten up dramatically over the past year. But when you take a look at the IBD accumulation distribution ranking, it's coming in at a B, and we have a green light. The shares are under accumulation. So when we take a look at this, we want to take a look at the chart and say, okay, is the chart validating what Investors Business Daily is telling us? And you take a look at this chart, absolutely. You can see that we've been in a downtrend channel, and here you can see the value of the automated trend lines. I did not draw these. These are your fractal trend lines. This is new to Trendspider. I'm going to take them off. I'm going to throw them back on. And now you can see your downtrend channel clear and defined. And last week, I'm going to take them off because there's another trend line I want to talk about that's important. Last week, what we did here is that we recaptured a prior support level. It had broken down the week prior to last. That would have been a sell signal, but however, is that last week there was a negation of that sell signal, and automatically it became a buy signal. I wouldn't buy aggressively here, but this is one where I would scratch the itch, put on a few shares, but with members, what we're going to be talking about again, entry points, stop loss points, and price targets. I'll post them in the members area, and we'll talk about the daily chart and our strategy for entry on the week ahead commentary again. 4 p.m. Eastern Standard Time. It should be posted in the members area. And I also want to point out on this chart that the short volume, as reported by FINRA, has been trending down. Now think about this. Let's go to a monthly chart for a moment. Here's the short volume. It's dropping off of a cliff. What does that mean? It means that nobody's interested in shorting Arkk anymore because all the money's been made. There's only one problem. The people that have been shorting Arkk, unless they've been legging out very, very quietly day after day, there are a lot of shorts in this ETF, I can guarantee, that are waiting to get squeezed. And we want to be a part of that. So again, members, we'll talk more about our strategy with Arkk on the week ahead commentary. Now, the next chart I want to talk about is Clorox CLX. It's not sexy, but the chart is, to me anyway, as as a chart nerd, is really sexy. I mean, a hot steaming 10 sexy, because what we've been doing here since January of this year is that we've just been trading sideways. And there's a phrase that I use: the longer the consolidation, which we have here, nearly a year now, the greater the validation of any breakout. Again, the longer the consolidation, the greater the validation of any breakout. Now, this is from a monthly perspective. Let's do a deeper dive and see how we closed out the week last week, and it gets even better, because what we did back here in June was we bottomed out. And that's no reason in and of itself to go buying the stock, unless, of course, you're using Trendspider and you were trading off of the trend lines, which is fine. But you needed to get out up here where the upper band of resistance told you to sell. It told you to buy down here, told you to sell up here. That being said, let's take the fractal trend lines out of the equation. Let's take our crayon out. And actually, we don't need to, because the automated trend line did it for us. Watch the line in green here. I'm going to take it off. Click of a button. Pop. Put it back on. We put in a higher low. And now what we did 3 weeks ago is we broke out above another upper band of resistance. Last week, we consolidated gains after the stock broke out above another resistance level the week prior to last. What is this chart telling us? There are more buyers than sellers. And what it's also showing us is that last week you saw a tremendous amount of buying interest come in, as noted by this green volume bar, and it is well above the moving average, which is highlighted in blue. So what this chart is clearly telling us is that you have institutional interest in a stock which has been consolidating for nearly a year now. And as with the previous charts, I'll be going over this more in greater detail with members on the week ahead commentary. We'll go over the daily chart, perhaps the intraday charts, to discuss, are we at a point where we want to open up a position, buy, scratching the itch, and opening up a small position, and then looking to add to the position as it begins to perform and break out to new higher highs? That's what we'll be talking about. And again, I'll post the price target, entry points, and stop loss points in the members area. Again, folks, if you're not currently a member, please sign up for the 14-day free trial offer. And as you can see here, as we close out Clorox, Investors Business Daily does not give Clorox a high composite rating. Well, we know that from the share price. That's fine. Is it a liquid stock? Of course it is. It's a household name. And what I like about it, it's number 2 ranked in its group, and it's got a relative strength rating of 76, giving us a green light to begin accumulation of the shares once we get the buy signal from the daily chart. So Clorox, bullish. Now, the next stock I want to talk about is Enphase Energy. And you can see here, Investors Business Daily loves this stock, giving it a composite rating of 99. It is ranked number 1 in its group. The shares are clearly under accumulation. This is a monthly chart. And as you can see, we had been consolidating for several months, and then we broke out. And this month, we have a continuation move up higher. And when we take a look at the seasonality of Enphase, December's a pretty good month, up 71% of the time. January, February, the bias is to the bullish side in terms of performance. March and April, those are the weakest months. So we would want to reconsider our position, or at least put on a hedge if we're still long of Enphase going into that time frame. But from right here, right now, this is a generally favorable period of time of the year, both in terms of seasonality and in terms of technical performance. Now, doing a deeper dive into the weekly chart, here is your inverted head and shoulders setup. Left shoulder, head, right shoulder, neckline right here. What did we do? We broke out last week. So I'm going to be talking to members about our entry point on Enphase and the strategy that we might use to trade Enphase to the long side. And I could share that with you. It's either going to be the common stock, or we're going to open up a call spread, because this is a pretty expensive stock. Now, what a call spread is, it's the purchase of a deep in the money call option and the simultaneous sale of a deep out of the money call option. And that helps finance the trade. and you reduce your buying power necessary to purchase these shares. Now, the key is don't go too close in time frame. Go later dated on the time frame. That way you don't see all too much time decay. So again, members, I'll be sending out trade alerts on all of these if and when we get long. I'll be talking about all these on the week ahead commentary in greater detail in terms of strategic entry points and in terms of stop loss points, buy points, as well as price targets. Now, before I proceed on to our final chart, folks, I want to remind you that we're going live Sunday night, 6 p.m. Eastern Standard Time. Please join us. It's a really, really great group. We have a great time. We go over the opening price action of the stock market futures. We talk about commodities. We talk about bond markets. We talk about currencies, stock market, etc. So it really helps prep you for the new trading week. The group of people that we have on the live stream, they are extremely intelligent, very, very engaged, and just nice people. It's absolutely free. We live stream on YouTube and Twitter. We also go live on Thursday nights for Thursday Night Stock Charts Live, which is where we review the weekly charts. How are we poised to close out the week? As technicians, we want to begin to position ourselves for the following week on Friday. We don't want to wait until Monday morning. So join us. Click that notification bell, please. And if you haven't already done so, hit that like button. Final chart up. American Express, AXP, the symbol. What do we like about it? Well, we like the fact that AXP is breaking out. It is under accumulation. It's clear and defined. You can take note here that according to Investors Business Daily, we have an SMR rating of A. And for those not familiar, I just typed it in. The definition, IBD's SMR rating is a combination of three gauges: sales growth, profit margins, and return on equity. Return on equity is the most critical metric for any financial. They score an A in this category. Therefore, I am very interested in AXP as a best-of-breed player in the financial space. Plus, I use AXP, American Express, constantly. I love the company. Now, this is a weekly chart of American Express, and as you can see, we did what you call an undercut double bottom, meaning we hit a low here back in July, rally, put in a top right at resistance, and then we pulled back and we broke the July lows in September through October. Now we have managed to, you can see this line in green here, that's the automated trend line generated by the algorithm. Take it off, click of a button, put it back on, and you can see that we recaptured it the week of October the 24th. We retested it to ensure that it would hold the week of the 31st, and then we broke out the week of November the 7th. And since then, we've been consolidating gains. This stock is getting ready to take off. How do I know? Institutions are paying attention. Take a look at the volume bar. The volume bar is rising above the moving average. And how might you have known to have purchased these shares back here? Simple. If you had had the fractal, again, this is brand new and I've been playing with it. The fractal trend lines up, they would have picked off the buy point right back here in June, a retest here in July of that support level, and it would have been off to the races for a trade. Not necessarily as an investment at that point in time. Now, this chart is setting up for a longer-term investment from here to here or here. That was a swing trade. Buy, sell at resistance. Now that we have a double bottom setup and now a breakout to a potential higher high, now we're interested in AXP as not just a multi-day swing trade, but more of a longer-term swing trade. And I think the same could be said for Clorox as well. But it all depends upon how the markets hold up, folks. Everything that we've just gone over means pretty much nothing if, of course, the S&P 500 fails to break out. Because remember, most stocks, 80, 90% of them, are going to trade longer term along with the S&P 500. And that's what we're going to talk about on the week ahead commentary with members. What are the probabilities of the S&P 500 breaking out? And again, members, that'll be posted in the members area shortly. Folks, if you're new to this channel, please take a moment, like, subscribe, leave a comment. I'll definitely get back to you. Sign up for my 5-part video tutorial on my top 5 favorite candlestick patterns. If you like Trendspider and you're not ready to join the Contrarian Trader, that's fine. Take advantage of their 7-day free trial offer and the 35% discount code that I pass along to you by using the link below. And don't forget, if you decide that you want to join up for our 14-day free trial offer, we give Trendspider away free to our silver and gold level members because we want to add value. I hope to see everyone tomorrow night on Sunday Night Futures Live. If not, everybody have a profitable trading week and enjoy the remainder of your weekend. Be well.